And joining me now live is AMP Chief Economist Shane Oliver. Shane, thanks so much for joining us. What's your reaction to these numbers today?
Look, I think you have to see these numbers as very good. This is the second month in a row where inflation has fallen faster than expected. Yes, we're still seeing uncomfortably strong rises in prices for housing-related costs, whether it's buying a dwelling or renting, and also energy, electricity and gas in particular. And of course, also insurance you'd throw into that. But the trend is down. We did see inflation peak at 8.4%. Now it's 4.3%. We had some very high numbers in December last year. When the December numbers come out in 3 weeks' time, those very high numbers, particularly for travel, will drop out. Don't forget, last December, travel costs rose 27% in 1 month. So that's going to drop out, and the likelihood is that when we get the next update for December, we'll see inflation in the threes, possibly as low as 3.3%. So I think things are clearly going in the right direction here. The Reserve Bank has become too negative, too pessimistic on inflation, and the likelihood is that they won't need to raise interest rates again.
So if the trend is then heading in the right direction, as you say, do you think that interest rates have peaked based on these inflation numbers?
Well, I thought they'd peaked prior to this, but these numbers confirm that. Yes, there's still a risk there that they will move, but I think the RBA's own inflation forecasts are now looking a little bit too pessimistic, and the likelihood is that this clears the way, or helps clear the way, for rate cuts through this year, probably starting as early as June. Even the underlying measures of inflation are coming down. The so-called trim mean fell. If you exclude volatile items, it fell. Clothing prices are down on a year ago. Household equipment prices are down on a year ago. So we are seeing some pretty good readings in here. And it's also following the trend we've seen internationally, where the US and Europe peaked before us because they went up before us. And we're following them down. So good news, and I think it does mean rates have peaked.
Overall, what does the state of the economy look like, and what is the likelihood of recession now?
Well, the clear good news is that inflation is falling. That's been the big problem for the last couple of years. And ultimately, that will mean lower interest rates, not immediately, but a few months, 6 months down the track, we will start to see lower interest rates. I guess the downside, though, is that it's hard to believe that after such a massive rise in interest rates, there won't be some economic fallout. Part of the reason inflation is falling is because demand is slowing. People are hanging out for the discounts because they don't have the spending power they once had. And that obviously does run the risk of recession, and we think that risk of recession is high at around 40%. So far, we've managed to avoid that, which is good news. The economy has proven far more resilient, but that risk is still there. And we know from the experience of the late 1980s, early 1990s, that it can take a while for the full impact of rate hikes to slow. So increasingly, as we go through this year, I think slower economic growth will become the concern, but the light at the end of the tunnel is clearly there. Inflation is down, interest rates will follow.
Do today's figures suggest that government measures to help the cost of living and to help households, has it had an impact? Is it working?
Well, I think it is. I know a lot of economists were sceptical, worrying that if you provide a subsidy or a rebate, you're effectively pumping money into the economy. But if you look at the rates of growth in electricity, yes, they are up. 10.7%, I think, was the number, but that would have been 20% were it not for those rebates or those subsidies. Likewise for rents, similar story there. So the government has been able to take the edge off these very high inflation numbers to some degree, and so that, I think, has helped. But of course, the main driver here is supply of goods returning to normal after the pandemic disruptions, and also the slowing in the economy, which is gradually starting to take pressure off services inflation. But I think those cost of living measures have helped to some degree. And of course, if you can keep down your headline inflation rate compared to what it otherwise would have been without those measures, it enables you to keep inflation expectations down, which in turn makes it easier to ultimately get inflation back under control. So I think the government targeted measures have been a move in the right direction, and I think they were a good move.
Well, certainly a very positive start to the year. Shane Oliver, thanks for joining us.
My pleasure. Thank you.